out. We all got to be friends, and we've been doing these events actually since 2014. We had a different kind of event that, just for a show of hands, for 2 years, this is their first Benzinga event. Wow, this is great. So, if you don't know Benzinga, it's a financial media company based in Detroit, and they've done a great job, not only with these conferences, but covering the whole cannabis industry in a very responsible way. Everybody knows that's near and dear to my heart. That's why I try to do the cannabis business as well. And these events have been very highly acclaimed. Glad we have some new folks, but about half of you are returning, which is great as well. This is the first time we've had a VIP event, and so I hope everybody's using this time well. We'll have a lot of chances throughout the conference. If you're an operator, you need investors need operators to supply in the competition, whatever it is you want to do. But this is a great opportunity, so I hope everybody's availing themselves of it. And I appreciate everybody showing up early. My word's going to be very limited here. We have a panel here that I'm particularly pleased to introduce because I know a lot of these people since day one of their entry into the cannabis, well, a few, day one of the cannabis entry, and some I've known Kevin Murphy for 3 decades actually. So we're just going to jump into it. I want to remind everybody at the end of this, we'll be a little bit more time for networking, and the main stage opens up at 8:45 for the rest of the day. So with that, I'm going to introduce everybody. There we go. So we'll start on the right. Vivian Azer, who started covering the cannabis industry, was the first Wall Street analyst to do so. I guess it's been about 3 years. I'll let everybody introduce themselves more, but that's our first panelist, Cannabis Discussion. That's the way to say it. That's why Jason's not talking right now. From New Frontier Data, and she's one of the ones I met really on day one. Kevin Murphy, CEO of Acres Holdings, right before Bruce Linden of Gage Cannabis left. So nice to have those two on the stage together. So why don't all of y'all come up and we'll get started.
It's just low. The level is low.
So before we get started, I gave a very short intro. Why don't you tell, start with Vivian, just a little bit about what you've been doing the last few years in the cannabis industry.
Sure. Thank you, Alan. Good morning. So happy to be here. Vivian Azer, Managing Director at Cowen. I cover the beverages, tobacco, and cannabis sectors. We've been covering cannabis since 2016, as Alan noted. First on Wall Street. I've been covering consumer staples or consumer packaged goods for a decade.
Good morning, Kevin Murphy, CEO and Chairman of Acreage Holdings, and friend of Alan Brockstein's for better part of 30 years.
Good morning, Giada Guayar-DeCarcer, CEO and founder of New Frontier Data. I'm a recovering banker. Also had a little bit of a stunt in the intelligence community, and today New Frontier Data is the only big data tech company focused on ingesting, reporting, and processing data for the cannabis industry globally.
Bruce Linden. I've got to get a Gage t-shirt because I don't have the right t-shirt on today. I got really nice Gage hats and cookies bags. I'm involved with a handful of companies that I select over the course of the summer and have enjoyed working with Alan. In fact, Alan knows that if Alan invites me, I will show up despite it not always being the right time or place for me. So shout out to Alan.
All right, so a little bit of a warning. These were not my questions. Apparently artificial intelligence. So if they're a little provocative, just tell me. We'll start with Vivian. This is very timely. I would have asked this one. What is the impact of the vaping illness on consumer trends, and how's this affect your coverage and your views of your coverage?
Sure. So we see impacts across both the nicotine and THC categories. Just to level set, there does seem to be consensus from the CDC and the FDA that E-Valley, the e-cigarette-related lung illness, is largely being attributed to illicit THC. I don't know that the media has quite picked up on that with the same intensity that they did reporting the lung illnesses and fatalities, which is unfortunate. We use headset data, and we found that in September, month over month, there was a 14% decline in vapor sales. It had a modest impact in overall adult use sales. We're looking at California, Colorado, Washington, and Nevada, where we saw a 2.5% decline month over month in overall adult use sales. On the e-cigarette side, we saw an 18% decline in the Nielsen data.
So as a follow-up, do you think you'll have to reduce your targets or earnings estimates for the companies?
We did on Friday across the board in Canadian cannabis, just because of the knock-on effect, potential just consumer migration away for the U.S. MSOs as well as my tobacco coverage.
So Kevin, again, this is the artificial intelligence one. Seeing your stock's performance following the announcement of the arrangement, do you ever second-guess the Canopy deal? That's right out there.
100% no. I think that the combination of efforts that was conceived by both Bruce and myself, I believe will lead to a dominant global player. We have historically and continue to be focused primarily on the United States. Canopy is frankly focused on everything other than the United States, and together we believe that we will be, frankly, the dominant global player. Now, going back when that deal was done, things were going exceedingly well, and there were a lot of comments as, well, we capped our upside, we sold out. I've actually lived through a lot of different cycles, right? I've seen the late 80s, the early 90s, the crash of 98 with the Russian crisis, 2008. I've lived through the goods and the bads. Today, we're in a market lull. We're in a kind of a trough. And when we did that deal, we did it for the long game, 5-10 years out. And so our view is, if you have sustainability and access to inexpensive capital, you're going to be the winner. So now, at a time of unrest, and frankly, capital markets not being terribly appreciative of what's been creative and not open to accessing cheap capital, we in turn don't have that disadvantage. So, we prepare for good times and bads, and again, I couldn't be more proud of the friendship that I had established with Bruce and the combination of efforts.
So for anybody that's interested, Kevin and I will be having a more extensive conversation in about 3 hours on that topic and more. So Giada, I may ask you a different one because you guys have been doing a lot of M&A, but for now, first one, can you discuss the opportunities and challenges of the global cannabis market? And she's a good one for global because they are truly global.
I need like 6 hours to answer that question. But overall, so North America continues to be the epicenter of all things cannabis consumers. So, let's just put that aside. Because there's I hear a lot and we read a lot about, Europe, Latin America, yes, there are opportunities there, but not necessarily from the consumer perspective. Opportunities in Europe today are very much B2B opportunities. What we're seeing there is consumer packaged goods companies, food and beverages, healthcare and beauty, as well as pharmaceutical, alcohol, and tobacco coming in with large infrastructures, multinational presences, very sophisticated enterprises, and they're coming in looking to enter the cannabis space and engage with the cannabis consumer, primarily North America, beyond Europe. So certainly a lot of opportunities for investment and partnership in Europe. After that, I would say Latin America is becoming more and more attractive. Latin America has very low labor costs when it comes to cultivation, and there is an intrinsic, innate drive, both by the people and governments, to curb illicit cannabis cultivation. So it's kind of a nice convergence of low labor cost, lots of land, good climate, and actual will of the people and the governments to enter the space. What we're beginning to see is a lot of imports coming in from Latin America, actually through Canada in many instances, but also much investment into what is land and cultivation and agriculture infrastructure. We haven't quite seen anything in terms of processing and extraction, which will be interesting. We'd like to see more of that. So certainly a gap for those of you that are looking for new enterprises. Africa, I'll end with Africa, Asia Pacific, a lot going on there, but I think if we probably give it a year or two. But Africa is interesting only because, and we actually just came back from Zimbabwe, Africa is interesting because Europe, there is definitely a trend in Europe where everything is getting CBD infused, the creams, the beverages, the chocolates, right? So again, I'm not trying to undermine the demand there, but what is truly happening in Europe is that cultivation, national cultivation there is not meeting the actual domestic demand. So what we're seeing is Canadian companies, one in particular, are exporting into Europe, but now also importing from Latin America to meet the demand. And that's a long way to go. So African nations that are primarily, especially sub-Saharan African nations that are primarily tobacco agro-based economies are looking to transition out of tobacco cultivation into potential hemp cultivation to then extract CBD and potentially bring it over to Europe. So that's sort of very high level what we're seeing in terms of a global picture, but more than happy to talk more about it later.
What about the challenges side? What are some of the obstacles?
I was going to keep it to the good, positive. A lot of challenges, but candidly the challenges are many of the same that we're seeing here in North America. Regulatory challenges. So Europe is doing a much better job than we did in the US in terms of sort of learning from what we did wrong here. Nonetheless, the European Union is still to sort of come up with some blanket standards that would apply to all, so still infancy, fragmented regulatory framework. Standards, we're still missing standards on a global scale. That is a problem that we're facing on, which is one of the reasons why we're seeing the issues with vaping. E-cigarettes have been around for 2 decades, okay? So the issue is that now there's so much demand that we're seeing things coming out of the black market. Also, now we're seeing that the emergence in Europe and Latin America, more Europe than Latin America, but Europe and North America for sure. Corruption, that's more so in Africa and Latin America. Unfortunately, that's been around forever, and it probably will be there for a while longer. So certainly for large multinational enterprises, but also publicly traded companies, that's a big challenge because you're going to have to navigate that with kid gloves.
So I'm gonna just go extemporaneous on this one for you, Bruce. So there was an article in the Globe and Mail talking about how terrible legalization has been in Canada, and I know many of us, especially the investors, can relate to that, but certainly the patients, a lot of people, the consumers. And I guess my question for you is, should we be hopeful that things are about to get better in Canada in particular? And I've heard you say some negatives about it and positives, but what's the near-term outlook for Canada?
Well, so we just had an election that concluded last night, and I'm thankful the election of last night didn't happen in the prior one. Mm-hmm. It's because the Liberals got a minority, and they had promised in the prior election that if they were elected, they would implement adult access. If they had a minority, that could have gotten really screwed up. So now they have a minority. I'm a bit worried how hard they're going to push the topic, because this is a really weird election in Canada. It was, no one was in favor of cannabis, but no one was opposed. It kind of makes it really boring. And the effect of that was they didn't talk about all the jobs it created. They didn't talk about all the intellectual property that was resulting. They didn't talk about creating academic chairs in research and putting certain hospitals on a track to support it. So I think the whole platform, not just the party part, will get a lot better as we go forward, but it's going to have to be that a party picks this up as a differentiated position. And I think you're going to find that the Liberals do. I do think that the stores are going to open up because the state makes more money when they have more stores. They make more money when more products sell, and the products they enabled us to sell were really quite boring initially, right? It was basically some diluted oils and pre-rolls. That's not a huge traffic driver. But if you look at what's coming in January, I think it's going to be, the channel's going to fill very quickly. The products are going to be differentiated. I think people's revenues are going to spike if they have products at the top of the food chain. And I think there's going to be a bunch of companies that kind of crater if all they've done is build a bunch of growth. So I think it's going to be very mixed.
Can I ask you a follow-up, Bruce? Typical analyst.
By the way, between Alan being here and Vivian being here, I'm pretty much terrified. I'm largely terrified.
What about enforcement of
Yeah.
illicit dispensaries? Are there implications from the election for that?
Well, it's a good point. So there's a bunch of structures in the regulatory framework which allow police officers and others to say, you've allowed your building to grow cannabis illegal, you're just getting paid a lot of cash, or to sell at storefronts. And so they have the ability to actually start putting really punitive fines so it could become millions of bucks now. And I think what they're going to do is wait till January when the good products are there, the dispensaries are more common, and I think you're going to see a serious business interruption cost for the illicit market, both production and grow. So I wouldn't expect by the end of Q1 to see the cost per gram for the illegal product to be as low, and I wouldn't expect to see the points of sale to be as numerous. You're stealing the state's money. Let me know how that works out.
I had a follow-up too. Just it seems to me the number one problem is actually the distribution. And Ontario, being the largest province with just 20-something stores right now, is that going to change?
So, and I'm really uncomfortable because I get to talk a lot now, but no. It is going to change because what happened is in the biggest state in the country has about 7 or 8 million people. If you buy a bottle of wine at a store run by the government, the person selling you the wine gets 6 weeks vacation and probably makes $100 grand. Wow. Right? They work in a unionized, government controlled, they're a government employee. And the government makes all the money by running the box in which the stuff gets sold, the warehouse. So what I think they're trying to do with cannabis is to show why the hell do we own the points of sale in the warehouse. So the Ontario government, which is a bit right, is spending a lot of time and effort to completely invert the distribution model of the alternate to liquor and show that they don't even have to have a warehouse. They don't have to do anything and they can make all the profit. Then they're going to say, who wants to buy all the liquor stores and privatize them? And so it's a bit more, I think, textured than just how do we sell cannabis. They're trying to make a bigger point. So I think it's going to roll out quite well, but that's really been the game.
So Vivian, when you're looking at companies, how does the technology and the new advanced product forms factor into your view of these companies? And what's your expectation for future growth from that?
So in the last 2 months, really, since the first death was reported in Illinois, August 23rd, I've certainly had to temper my expectations a bit for certain novel form factors. But the thesis that we laid out in 2016 was that vapor was going to be the primary share gainer. And that's informed actually by our coverage of the tobacco industry. Because what you can see is amongst youth that e-cigarette use in the US is about 27% and cigarette use is about 5%. And our thesis continues to be your experimenter of today is your committed consumer of tomorrow. And so if younger consumers are increasingly unfamiliar with combustion in the nicotine category, wouldn't that necessarily translate over to the THC category? So while we have seen some modest share declines in U.S. vapor as a percentage of the total, it's still about 20% of category sales, though we have seen about a 500 basis point mix shift back to flower in the month of September because of some of these health concerns. It does, in fact, though, create an opportunity for other novel form factors, be it, edibles or perhaps to a lesser extent beverages, which are very small in the US at 1% to 2%. We'll see what happens in Canada. Hopefully the technology is better and you can optimize time to delivery, which really needs to benchmark against alcohol at 10 to 15 minutes, and the offset needs to be far more predictable, ideally at an hour.
Kevin, what do you think is the single biggest threat to you and your peers in terms of the U.S. cannabis operators right now?
Well, I think the single biggest threat, aside from maybe Vivian's pricing, is on a sincere note. I think that this is a market of perception versus reality. Again, being one of the more elder statesmen in the room, having lived through many cycles, the stock market, and I'm paraphrasing from Warren Buffett, but I think it's appropriate here, that the stock market is the only market that when it goes on sale, customers run, right? 2008, you could have bought thrifty car rental for 45 cents, only to wait 3 years later and sell it for $45. Now, when people look back on that time and said, wow, that was an easy, could have seen that a mile away. It was easy, right? Easy. To me, it's easy. You have the biggest macro trade in my lifetime in cannabis. You're going from the illicit market to a regulated market. Couldn't be more exciting. Matter of fact, several weeks ago, we had the House of Representatives vote 321 for House banking, right? When I was kind of hoping for 290.
Nobody noticed though. Right?
What's that?
Nobody noticed.
Yeah, and I think it's, so you see this prolific wave of enthusiasm in the House to get banking squared away. But I think the overriding risk and the overriding theme is people are running short of cash. People had growth aspirations, and we're going to rely on the capital markets to make it work. And now, unfortunately, there's a setback in the marketplace. And if you haven't planned for future growth and access to alternative forms of capital, you potentially could be in harm's way. And so, in fact, I think that safe banking is important not only to the MSOs, but also to the smaller players that won't have access to capital and won't for potentially a period of time. So you're going to see a lot of aggregation, but you're also going to see a lot of people go away, unfortunately. And from our vantage point, back to the relationship that I had developed with Bruce many months ago, a year ago, we couldn't be in a better place and feel better about the positioning. But we're hopeful and prayerful that everyone else has the opportunity to grow and prosper as well. So that's how I would leave the question.
Hey, I'm going to be a little extemporaneous on you. You've announced 2 acquisitions recently in your space. One of them, I think I wrote about this week, and one of the things that's been amazing to me, I didn't mention data technology as much, but in general, investors seem to be very focused on production, processing, and selling, and not all the surrounding ancillary stuff like you're involved in. So you're doing some of these acquisitions right now. Can you kind of talk about the whole landscape? It seems like it's a very open market right now. So what is your view on the landscape?
Sure. So New Frontier Data is sort of a big data company, but at the end of the day, the way we mostly process information is to predict market trends on a global scale, right? Up to the macro level, down to what the consumer is going to engage in and click on. As we do our work, we tend to be our first client. And about 18 months ago, about 2 years ago, we decided we were going to take a survey of the entire global cannabis space. At the time, there were over 40 nations that were legalizing simultaneously, faster than the 33 states in the US legalized. Today, there are actually more than 60. So we began, and obviously we can't be in every single country at once, so we began to test the temperature in each region. We went to Europe, we spent time in Europe, we actually opened an office there, went to Latin America, went to Asia Pacific, in fact met Bruce there, went to Africa to try to figure out what is coming next. And one of the things that emerged to the top immediately is what I mentioned briefly earlier in terms of Europe. A lot of these large multinational enterprises, these consumer packaged goods, and also FMCPGs, fast-moving consumer packaged goods, they were seeing sort of the attractiveness of sort of this new cannabis consumer that we actually defined early on last year, in the United States, and they were very intrigued by sort of this cannabis consumer that is affluent, very engaged digitally, very large, almost double the size, if not triple the size of an online cart than the traditional consumer. So they wanted to know who is the new cannabis consumer, and they began to test the waters. Within a year to 18 months, we began to get the calls of these very large companies wanting to understand sort of, actually not the companies directly, they're advertising agencies asking, how does one engage with this new cannabis consumer? Who is this cannabis consumer? And so this, in the mature market, and I wish Gary was here because he comes from ad tech. In fact, Mr. Gary Allen, our CEO, invented some of the algorithms that are used in ad tech today. We realized that the level of that what we needed in order to serve that demand was going to be some serious sophisticated technology beyond even what we were doing in big data. So you mentioned artificial intelligence, beyond artificial intelligence, machine learning. Basically, these large multinational advertising agencies need packets of data in real time that tell them exactly, where that niche, that pocket of consumer is. So who should they target? who is that person, how old are they female, what do they usually do, what do they click on? I mean, they want it all. And in the mature market, you can do that. You can literally predict what you and I can do down to the minute, which is why when you go on Amazon, you clicked on something last week and all of a sudden, oops, look, there it is again, I'm gonna click on it now. That's what they're expecting. And in the cannabis industry, for better or for worse, I remember when I started in 2014, and Alan is the first person I met. When I got up on stage and talked about big data, there was literally someone who booed me off it. It was like, if I can't smoke it, who cares? There's been, I think we're much more sophisticated in the industry today, but not quite at that level. And so 18 months ago, we realized we needed to fill some gaps to meet that demand. And Gary will talk about it actually more in a few hours, between 3 and 4. But the idea is we needed to be able to help these agencies and large enterprises discover, define, and deliver. And in order to do that, we needed to fill the gaps in terms of what we do. Because as a big data company, the discover part means discover the opportunity, discover the challenges, right? The define is define the consumer. And in fact, Zephyr is here in the room, and that's what they would help us do, define. Zephyr is basically the Nielsen of the cannabis industry. I like to say the mini Nielsen of the cannabis industry. And then deliver, and that's where Civilized comes in for us, whereby they provide us a platform where we can deliver to that engaged consumer in a controlled environment, in a safe environment, where we can test messaging and then eventually test advertisement, and then more broadly expand advertisement to other platforms. So long-winded, but that's why those two acquisitions occur. So now we are primed and well-positioned to be, with as much humility as I can put out there, the only one-stop shop for market entry into the cannabis industry today, globally.
So are you seeing a lot of scalable businesses out there, Giada, or not
Pardon
yet?
me, say that again?
Are there a lot of scalable businesses yet? You guys are aggregating some smaller, but are you running into other scalable businesses? Or for our investors in the crowd, is it too early?
That's a very interesting question, and one that we pose ourselves daily, if not hourly. Listen, depending on where geographically you are, the opportunities are quite diverse. So yes, is there opportunity to scale for businesses? Well, if you're in Latin America and cultivating, hell yeah. Same in Africa. If you're in Europe and you're looking to sort of get into the extraction and processing, most likely, or distribution, right? If you're in North America and continue to sort of be a B2C in terms of consumer packaged goods specific to the cannabis industry, absolutely. So it truly depends on the where, the what you do, and of course always the when. But yes, there's much scale to be had, absolutely. And I'll end it with this. We spent 5 years trying to size the illicit market. We were asked in 2014 and 2015 and 2016, and we were unable to do it. Finally, in 2017, 2018, we felt that our modeling had gotten sophisticated enough that we could. And we came out, as of last year, that the illicit and legal demand around the globe is close to 344 billion. So yes, there's room to scale.
Okay, so I've had 7 people this morning ask me if you're going to say anything. A lot of people asking me for last month. This MSO, the mysterious MSO, is that for real? When are we going to learn about it?
I'm working on it.
Okay. Dang, I thought we were going to do it right now.
So here's the thing about working on it, right? The reason I wanted to work with Gage and see a single state really deep, what's it look like to own one state? What's it look like to be the best? And then in the MSO themes, there's so many topics. Is it about which states you are? Do you want east or west of the Mississippi? Is it about a stack of IP, or is it about a bunch of brands? And so you start going through it. And so I'm getting closer, but what happened is I got kind of really busy, right? Like Gage's got a bunch of stuff going on. MindMed's got a bunch of stuff going on. So what you do is, if you're me, you park that MSO thing and get on with the other stuff. But I'm hoping in the next week to be finished it, because then I'm finished with everything. And then I won't be up here for about 3 months because I'm getting sick of me. You guys must be getting sick of me. And I want to work, right? Like I want to actually, when you look at the MSOs, the opportunity is, Kevin's nailed it. If you can structure capital now at even half of what would be the current rates, and you can actually have a pool of it, all you have to do is think about like what's in it for the money. And I think there's a whole bunch of better ways than just simply getting reeded up to actually get capital in. And the ways that it's going to work is, if you've got a little bit and you do the right smart matching structures, I think you can get a 2 to 3 to 1 torque on whatever cash you get, so you knock your price down. And so I've been working a lot more on the financial instrument side, frankly, than the MSO, because if I show up at an MSO with an answer on capital, I think that makes me relatively more valuable.
I think Vivian could probably say this better than I, but I heard the other day that, I won't name names, but we're raising money at 30% because we can invest it at 70. And I'm like, raising money at 30%? I mean, is that jiving with the way the world looks right now, Vivian?
If you can,
All in cost.
Yeah.
I mean, if you can access the capital, but I think to Murph's point earlier, it's been very, very challenging. And I should clarify, it's not just a cannabis issue, right? This is the worst IPO marketplace for the broader markets that we've seen in many, many years. I mean, WeWork's CEO has just been offered by SoftBank $200 million to go away. So, I mean, this isn't just a cannabis issue, it's a capital markets issue.
I should have started an office space company.
But I think you're correct.
I had another one for you, Vivian. So when you started off, you started at the top and the easiest ones to cover, the biggest and way removed from the United States. And your coverage has liberalized, I guess. How does Cowen go about, and just for our investors in the crowd, how is it that you're picking which companies you think are the ones worth following?
Sure. So while Cowen is a publicly traded investment bank, as a research analyst, I'm perfectly independent. So from a banking perspective, we cannot bank anything that is in violation of federal law, so nothing that's U.S. plant touching. But I really go wherever my institutional investors point me. So yes, the first large cannabis company we ever covered was Canopy Growth. And then we rounded out the Canadian coverage. And then on September 13th, we launched on 5 multi-state operators, including Acreage Holdings. It was really just based on investor interest and market cap.
And Kevin, for our investors in the crowd, not just your own portfolio, but in general, what do you think are the most exciting states from a growth perspective in the United States?
I think that every state has its own different nuances. Clearly, California is a huge state as it relates to trend-setting brands. It's a wide open marketplace with a lot of opportunity. I think that, if I think about state by state, I think about the New England cluster as one large opportunity. I also think the tri-state area, New Jersey, New York, Connecticut, the governors of those states collaborating on how to really, on a united front, figure out the adult use market. And I think when you see this type of interest and you see this type of collaboration, to me that breeds excitement, because now, frankly, the people of this country are being heard on the cannabis side of the business. And, I spent a lot of time in Washington, and frankly, 3 years ago, a politician really didn't care to discuss cannabis because their constituents weren't really talking about it. Well, today they are. So I think Illinois is a very, very interesting state, given the fact it's the 5th largest state in the United States. And I think it's transitioning pretty well to adult use. I think a lot better than, frankly, a state that I had a lot of admiration for, Massachusetts, which I think, if any state could get it wrong, they've done a great job. They have some
competition.
They've excelled, So, but as we see, every state and every, unfortunately, everything is subject to change. Nevada, awesome until less awesome, where they put a pause there and said, okay, let's not, have any transfer of licenses for a period of time. And I think that, if you don't have the stomach or the staying power for this business, you're best, investing in real estate or something else. Because, the one consistent thing in this business is everything changes. And that you can count on.
Okay, so we have about 12 minutes. I'm not sure if we have a mic. I might have to borrow one of these mics. But do we have some questions? Can somebody tell me if we have a mic for the... Let me borrow a mic.
There you go.
Does anybody have a question? I'll come down.
Thank you. For the room, I've been in this space for a while, consulting for about 7 years in Illinois and Nevada. I've worked on some M&A projects in Florida, and I've gotten to know some of the MSOs that will be speaking at this event. And capital has become a challenge recently only because the investors don't know enough about what Mr. Murphy talks about in the long game. And on the acquisition side, I'm working with people that have licenses that might want to move them, or a brand that they're now being ready to be bought up. And my question to the room is, as the stock prices have come down a little bit, what can the MSOs do from an acquisition perspective for licenses that are out there to ensure the investors that their money is going into something that has a cash flow positive return, like licenses in this state that are going live in January?
I'll let Vivian start on that.
Thanks. So I would take issue with your characterization just a little bit. Yes, I think there is some short-sightedness amongst the investor community, but I think it's unfair to ignore the negative revisions to revenues. That has absolutely happened, and you can't sustain an even higher multiple when numbers are coming down. One of my biggest criticisms of some of my peers who are covering the US MSOs is that every time a company announces its acquisition, they build it into the financial model, whether it's gone through HSR or not. The problem is that when you build it in, even if it's like a MedMen Pharmacan, right, when that got announced, you build it into the numbers. Well, the deal hasn't closed. So when you put, an Origin House or, any of the pending acquisitions into the model, and then even if HSR just takes a little bit longer, you're already pushing your numbers out a quarter, that means that the stock is gonna come down. So I would argue that it is really on the MSOs to be much more proactive, like any other large cap CPG company would be, in terms of managing how the sell side is modeling numbers. And no one should be modeling anything outside of organic growth, as far as I'm concerned.
Anybody else want to add?
Yeah, I'll take a crack at it, and I'll give you a little bit more of a macro view, and I clearly appreciate Vivian's view, and not only that, but the fact that she didn't mention any of the acquisitions that we had done. But that said, let's go back to kind of the overall investing 101. Before becoming a ganjapreneur, I had been a professional money manager for most of my life. Started a firm in the late 90s, grew it to about $35 billion. Wasn't by chance, and frankly, it's not a boastful statement, it's just a matter of fact. And the reason I state that fact is because we got paid every day to make assessments on not only companies, but with the longevity of those companies. And I was a more cynical investor, given I was a corporate credit guy. So all I did was invest money to hope to get a principal back and a modicum of interest. I'll let the equity story take care of itself. But 80% of your return will always come in a macro trade. You were pretty smart in 2007. You weren't that smart in 2008. And to make it really, really easy, again, no greater, in my mind, opportunity and excitement in this business, number one. And number two, absolutely, you need to rely on, Vivian and other analysts to say, okay, who are the right horses and who are the right jockeys to ultimately ride through these tough times? That will be critical. MySpace was an awesome idea. Facebook is a little bit better. And, where you had the tech bust and it was carnage everywhere, Google, Amazon, Facebook are some of the largest companies in the world today. So again, as you think about your investment portfolio, as an investor, you're a taker of risk and you're a seller of risk. Yes, when you have, frankly, cowboys running the show, with frankly, spending that, like they're drunken sailors, that's a problem. That's a problem. But I think, but I think that so that's the key. I think let's not lose sight of the fact that this is an opportunity that probably shouldn't be missed, even in this dark time.
I want to chime in because I thought it was a great question, and I told my subscribers at 420 Investor that my number one goal with this conference is we're in between earnings seasons right now. We've had a lot of M&A announced, a lot of big plans that are sitting out there that it's not real clear that these deals will all close. We just saw one that didn't, for instance, and I think your question is the right one, and my question that I want to ask everybody is, the world just changed, what are you doing? And I think it's all of y'all should have your ears open to the answer to that question.
Well, and Alan, I think part of the analysis is too is that when I was trying to look at the companies, I don't put them in you're in the business. It was more like your credit stuff. I look at like, what are their tangible assets and how levered up is their balance sheet? Where are those tangible assets? Geographically, what states? What do I have as a percentage growth expectation for the states they're in? And when you do that, you make a spreadsheet and it gets to be very uneven. You start off thinking, what do I really like? And where you end up is a different answer. A lot of it comes down to like very different levels of leverage, hugely different.
Another question?
I think you got one there.
The beauty being in the front row.
Hello.
Good morning.
Just concisely, what 5 financial ratios would you put in your toolbox, as well as combining it with a short play of technical analysis?
You're not going to get a technical analysis answer up here, I don't think, but Vivian, you're probably the best one to start that one.
Sure. I would continue to focus on revenues. There's a couple of ways to do it. So certainly for the Canadians, you're looking at enterprise value to like either FY1 or fiscal 1 or fiscal 2 revenue metric. We've also done basically a revenue version of a PEG ratio. So you're going to take that EV to revs and divide by some kind of growth metric just to normalize and give credit for outsized growth. For the U.S. MSOs, because consensus is so unreliable because of the volatility around deals not closing or getting pushed out, we've opted to do an LTM, last 12-month EV to revs. Hopefully, over time, it should be an EBITDA multiple. And we are starting to see profitability, and that will drive a divergence in the space. So those would be the 4 that I would tell you.
Does anybody else have one? Or?
I would add, look at sales by company to see milligrams versus grams, which format they're selling it, and what percentage market share they have in each of the categories. Because the milligram concept mutates quickly into the fact that most companies that sell by milligram will end up selling far less milligrams for way more money, right? You're mixing with other co-agents. And so like I would look at somebody trying to understand, are they on the path to a low milligram per serving high revenue point? Because people pay a lot for like bubbly water mixed with milligrams if you do it right. There's tons of options in the world, which that's where it comes down to, I think, in milligrams, you can sometimes make more easily differentiated goods. Like I highlighted cookies because I saw them on a grams basis being differentiated and understood. But I think on a milligrams basis, if you do the technology right, the container right, people identify the outcome they want and they buy the same container with the same ingredients and you make more loyal income. And so I'm looking a lot for companies moving up. Like if you can sell 2.5 milligrams in a $3 beverage, your invested milligram cost is what, $0.10? And so it doesn't, to me, that looks like a great model because I find bubbly water very inexpensive.
But to the extent that you don't have the bandwidth to do that level of detailed analysis, gross margin would be a very good proxy.
Yeah, yeah, moving up in it, because gross margin is all driven by milligram.
I think right now, I was going to say, I'm going to differ. Look at price to tangible book. It's a very boring ratio that most people don't care about, but it's fascinating. And I look at the Canadian industry. You have some really big companies, and you can see some differences among them. But then when you get to the smaller companies, there are a lot of companies that seem to have enough cash. I won't name names. $58 million on the balance sheet, no liabilities, trading at about 1.2 times tangible book. And I think, this is 2008 for our industry right now. The capital spigot has shut off. And, we've heard about people that can access capital or not. Well, you can look right now, and that price to tangible book in the United States, when you go across the MSOs, very different numbers. And I have kind of a joke ratio right now, which is take a look at the oversold. You asked about technical analysis. If it's oversold but a high price of tangible book and low cash, don't just throw the chart away. You're wasting your time right now. Yeah, in other words, if the stock price, I don't want to pick on MedMen, for example, but, you know, if the stock is plunging and they have no cash and cash isn't available, if you're a trader or whatever, you better treat that a little bit differently than you might just a regular technical analyst. This is a real crisis right now. Look at Kevin. No, he's handling it very well. This is a real crisis in the United States, and I saw one analyst. Do you even use that metric? Probably not, right?
We look at cash burn very intently, which
Cash
is
burn,
why I
but not
have.
price to tangible book. I'm saying this is just an old school deep value metric that generally doesn't matter. I track it. It's generally you shouldn't track it. Right now, this metric is shining, I think. So, any other questions?
I have a bit of a simpler question on as it relates to the Florida market. For the cannabis companies, does Florida interest you as medical only, or would you wait to enter the market once they approve adult use? And then for New Frontier Data, where would you rank Florida as medical only? And then what do you think their opportunity is once they approve adult use, and possibly for Cowan and the cannabis companies to enter the market? Do you foresee it? Would you just enter organically by acquiring a license, or would you probably do it by
we have
ENA?
36 seconds. Giada, go.
I think I got some of it, where the Florida market
Talk about
ranks.
Florida. Is it a good market medical, and is recreational going to be awesome?
So yes, very good market medical. Why? I mean, look at the very easy makeup of population. Right, you have an elderly population that is beginning to be open to CBD and cannabis in general for all kinds of pain treatment. So and so we're seeing that from a medical perspective, it's a slam dunk. Absolutely yes. From a recreational perspective, that it really will depend. There are parts of Florida where it will do very well, and there are parts of Florida where it will not do so well. So it remains to be seen, and I'm going to keep it short and sweet.
All right, thank you. We've hit our time. Again, the main stage starts in about 15 minutes. How about a round of applause for our panel?